So we just heard from St. Louis Federal Reserve President James Bullard. Fox News contributor Liz Peek was listening. She joins me now. Liz, I was kind of shocked by his optimism. Not to say that I'm a negative Nanny here, but the point is he said no recession this year. He was very clear. He went on to specify that he thought GDP growth would be above trend growth, above average to 2.5% to 3%. Was that a little too rosy for you?
Well, I think it's at odds with what an awful lot of economists are talking about, David. Most people do not see a recession this year, mainly because monetary policy takes about a year to really kick in. So most people who are anticipating a recession, and that's not everybody, expects that to happen maybe mid-year next year. That would be the more likely time frame. As far as the growth in the rest of the year, I think he is too optimistic. I think 2.5% is kind of where we're landing. That's what the Atlanta GDP Now number looks like. That's what an awful lot of economists have come down to for a couple of reasons. One, the job market is beginning to look a little queasy. Consumers have been very uplifted by an incredible employment market and also rising consumer net worth as their stock portfolios and home prices went up. Now, all of those things are beginning to reverse. And we've seen that in consumer sentiment, which completely collapsed in the last 2 or 3 months. So I'm not as sanguine about the consumer. I think people are really nervous about inflation. And they're also getting a little more nervous about the fact that whatever retirement portfolio they had or nest egg they built up is getting trashed right now. Today, as you know, we're in a bear market.
Well, and I got to emphasize the fact that the Federal Reserve has access to all kinds of information that us normal mortals don't have. So, I take great caution at criticizing any Fed president because they do have access to this information. On the other hand, we got access to the financial records of Walmart and Lowe's and Target, and they looked bad this week. That's why we saw these 25% cuts in their market cap in one day for those companies. I mean, that's a significant event, a market event that is a reflection of the economy. And I didn't see that reflection in his remarks.
Yeah, and by the way, I agree. The Fed obviously has a lot of brainy people working on the forecast that they come out with. But by the way, they completely missed inflation. Why did they miss it? Again, one thing was consumer net worth, which increased tens of trillions of dollars in the 2 years leading up till today. And basically, they ignored the impact of that. It has an enormous impact on spending. And look, in terms of the profit announcements we heard from retailers, David, you and I have been around long enough to know that what happens in inflationary times is that some companies are able to raise prices and others are not. A big retailer that's vying for competitive market share via pricing is not in a very good position to raise prices. So I thought it was stunning that people were so shocked that they hadn't been able to push along the cost increases that all companies are experiencing right now, not just because of goods, but also because of labor. Guess what? That's what happens when inflation takes hold, and it's pretty ugly.
And if it's happening to these stocks that provide stuff that everybody needs from day to day to get along, you see what's happening in the NASDAQ. That's the more discretionary companies, the companies that produce things that we don't necessarily need. And the startups are getting killed. I mean, we had David Sachs on yesterday from Kraft Ventures. He's a good venture capitalist. He's been in the market for decades. He said 80 to 90% of the deals are falling apart over there.
Yeah, but I would take, again, one thought on the VC world, the venture capital world. People were throwing money at people coming out of school if they had, before they even had an idea. I mean, it had gotten completely ludicrous in my view. But secondly, as far as tech companies, some of that spending may be discretionary, but some of it is not. Some of it is companies responding to higher labor costs by automating their facilities more, putting in more automation in terms of their communications even. And secondly, a lot of tech companies like Apple comes to mind, can raise prices. So I think the tech thing has been overdone. I think we'll continue to see strong spending on tech. And I'm talking as someone who doesn't follow the day-to-day commentary on Apple, for example, very closely. But it seems to me that this is sort of the wrong emphasis. I think much more worrisome to me are consumer staples goods who really don't have much pricing leverage, who make something just like everybody else does.
Liz,
and that's a problem.
We only have 10 seconds. I got to ask, though, do you agree with Bullard that there will be no recession this year?
Not this year. Next year.
Okay. Liz Peek, good to see you, my friend. Thank you very much.